So, inflation. Well, let's be honest, the market hasn't really done anything. And there was an expectation that the market might not do too much, but there were all sorts of expectations that inflation was going to come in hot, it was going to come in soft, it was going to come in line, and it has pretty much come in line with estimations. In other words, the actual core CPI came in from 0.2% in the previous reading to 0.3%. So that has been a little bit of an increase, but the year on year has come down to 2.4% from the projection of 2.7% in the last reading. But the market's not done anything. Yesterday's non-farm data, or Wednesday's non-farm data, sent the market in chaos. So what does it mean now? Well, ladies and gentlemen, bets are in. They're saying now that we might get an actual additional third rate cut. And that means around 61 basis point cut on the interest rates. That should put us into the 2.75-ish region, maybe. Or the 3. It all depends on the range. But looking at the marketplace doesn't look like it's really reacting as optimistically about inflation. Why? Because we still have inflationary influence. What does that mean? Look at oil's price, geopolitical events. There's nothing going on in between Trump and Iran. Even though they're trying to do these nuclear talks, there's still that tension which can naturally cause oil's price to go up. Equally, there's still a war going on between Russia and Ukraine, regardless of the peace talks. It means that the warmongering is still happening. That can influence oil's price. More importantly, the labor market. What's going on there? It's doing great. 130,000 jobs coming into play. Awesome. More people can spend more money. That means inflation can actually go up. What we're going to do today is I'm trying to keep this live short and sweet for you all because it is Friday. So no trading day for me. I did my trading yesterday, caught that wonderful short on Bitcoin to the downside, ripped it apart, but I left money on the table because I was on my wonderful illness and it just knocked me for 6. I was like, I can't do this. And I traded the red vector candle down and then 2 more red vector candles came into play. I was pretty cheesed off about it, but never mind. We'll talk about it another time. So here we go. Let's break it all down and understand exactly what we're dealing with today. So US January consumer prices rise slower than expected. All right, look, when it comes to headlines, you've got to understand all week I've been on top of the game on understanding where we are with all of the data, all of the macroeconomic data that's coming out. And remember, if you watched last night's live stream, I strongly recommend you do watch that because I give you a complete breakdown on the logic to why I'm producing this trading regime for all the platinum members. Go and check it out in the membership, but go and watch last night's video because it breaks down the understanding of this whole thing that I do every single morning for the platinum members. It gives them a roadmap and a scope on each of the setups. Of course, today was a little bit different because it's it was the CPI data, but every single day, this is what they get. So go watch last night's live stream. That puts that into perspective for you. So you can go check that out over the weekend. Anyways, so consumer prices are rising slower than expected, which is all right. Because you got to understand, US companies have absorbed 90% of the tariffs in the sense that, they've had to build it all in. Which is why we've got this sticky inflation story. And it's just not going anywhere. And this is what the Federal Reserve is trying to work out. But today has given us an example that the market or the Fed is not really too concerned about it. Why? Because they're all fixated on the impact of rates. And I think they're waiting for overseas players. Let me explain. Look at this. In front of you, you've got this key right here, which shows you Aussie dollar right now sits at the top with 3.85%. Pound comes in at 3.75. Dollar comes in at 3.752. Okay? Now, what's important about this? This is the rates of return. What does it tell you? It tells you, will investors go to the Aussie, the pound, or the dollar? As it stands, you're getting a much better rate on the dollar, on the Aussie. Okay? Then when you go down to the yen, even though it's 0.75 to borrow the yen, you can take the yen, convert it over to Aussie, and you're getting quite a bit. And on top of that, you're earning a better yield. Whereas with the dollar, you're not getting that much, even though it's 10 points. 0.1 in points wise, you can appreciate that there is still more to be earned holding Aussie and pound. which is why the Bank of England's like, we can't. I mean, the Eurozone's got a bit of a problem anyway because it's got very low inflation, which means that they could actually be increasing their rates, so it puts them up there again. Because if the yield on the dollar is going to be going down, that's great for everyone to buy and borrow dollars and put them to work. And I think they're just waiting out. Today's read today hasn't even done anything to the marketplace. Look at it. This is the NASDAQ right here. It's done a nice little pump to the upside to fail the daily open, but the market's not fully open just yet. Going over to the QQQ, you can see we've got a gap down here. That's a little bit of a problem. The volatility index is trending upwards. I don't really like the volatility index moving up, but the 10-year futures are soaring. Now, this is very important to understand. When you've got the 10-year futures and the stock market, those are two types of classified risk, which means low risk, high risk. High risk is the stock market, low risk is the bonds market. When you start to see the bonds market increasing in value or the 10-year futures moving up, it tells you that they are seeking the idea of low risk in principle, all right? But then when you see the stock market going up at the same time, that means they're favoring high risk at the same time, because conventional portfolio diversification concept says that when these hedge funds put money together and they want to diversify, they're putting 60% of the capital into high risk, commodities, real estate, and then they put the rest of the 40% in US bonds as a low risk. High risk, low risk. When you see the futures markets moving up like this, and then when you see the NASDAQ market doing this and it's coming down, it kind of gives you an insight into understanding that maybe investors don't want high risk, they just want low risk, okay? Now, that would make sense. Go over to NVIDIA and all the rest of the gang. What's going on over there? Tesla. Currently trading negative in the pre-open itself. It's just trading ever so slightly negative. It's actually down 2.26% from yesterday. So it has got quite a few to take advantage of in sense of recovery. You've got NVIDIA as well, also trading sideways. They're pulling back from their highs. Amazon still not able to recover from that fact that they have increased their expenditure on AI to $200 billion. Investors don't like that because they feel like they're not going to be getting the earnings in the future. But let's just talk about something right here, ladies and gentlemen. Look what happened to Coin. They reported a loss of around 600 billion, I think it was, or 242, whatever, 600 million, something like that. But anyway, they took a bit of a tumble to the downside and the earnings per share came in lower. It was really bad. So if we look at it, earnings was minus 80% and sales was minus 22%. That is no good. All right. Now, it might be just because of the cryptocurrency pulling back, not many users using the platform, they're not trading as much, people have been shaken out on capitulatory events. Maybe that's the case. But minus 80% in earnings and minus 22% in sales, that's not really good right now. And they've effectively, even though the future looks good for Coinbase, in my opinion, ladies and gentlemen, this is discount. Sorry, it is a discount process. Businesses will always go up and down, and these things happen all the time. Whenever you capture an accelerated earnings and sales in a company, it effectively means that there's business happening and they are progressing and moving forward. So you capitalize on that. But on the days that you've got this sort of behavior here, there is a lot of accumulation happening in Coinbase, in my opinion. If you notice here that in the September quarter to December quarter, we can see that their fund ownership was 2,242 and then 2,132. Mark my words, Circle is going to start seeing that sort of behavior. What, you didn't think I'd be still back in Circle? Of course I am. Look at the Circle's actual increase in ownership. Look at this. Ownership's gone from 3.7, so it went from 168 in June, 375 in September. That jump is huge. From June to September, 375, and then December 2025, you got 444. Because you guys are looking at the idea of price action. That's what you're doing. Like the guys that are, not all of you, but the guys that are like, yeah, great Circle call. Yeah, because it's a value-based stock. Do you think Warren Buffett looks at price action? No. He looks at the statistics. He looks at the ownership. He looks at the funds. He looks at the earnings. He looks at the books, the return on equity. He looks at all of that stuff. And he looks at the cycles. Look at what this company does. Coinbase gives you the opportunity to trade crypto and move it about. These guys provide digital currencies, public blockchains for payments, commerce and financial applications, a much bigger environment. These guys are going to soar. But you know what? It's good because you're looking at price, action, but when it comes to value, this is discount. Sorry, absolute discount. Anyway, let's just break down what happened yesterday with the trades. It was a bit of a crazy trading day yesterday, I'll be honest with you. So let's just have a look here. Yeah, it was last night I took a couple of longs on Bitcoin, Ethereum, and Solana, and it was quite interesting to say the least. So let me just go with what happened yesterday with the short. Where is it? Here we go. There was my short. So yesterday, Bitcoin's price came from the highs. We caught the high on the setup for the platinum members. Average open 68,343, and I closed it at 67,464, and I just gave it away, man. Like, I could have gone all the way down to 65, but I wasn't well. Couldn't trade that one. We cleared at 975 there. Then we had 875. And the good thing is when you use cross on BTCC, it mimics MT4, which means that when you open an entry, it's at the price point that you open it at. It doesn't move your entry, okay? Which is really good. It helps me build positions in ways that I want to build it. Rather than moving my average entry up, okay, it actually keeps my first entry in one position, then another, then another. It's really good for that. But that's why I use it. Anyway, and then we've got this one here, $739 yesterday short. So cleared a decent 1,500 to, yeah, just under $2,000 move on that. But then last night was a bit of a wild one. So started going long on Bitcoin, 439, entry at Solana, sorry. Yeah, so I traded Solana, and then I got some tuppence right here on Bitcoin. Bitcoin just didn't move too well yesterday. And then we had the 279 right there, 317. I opened a lot of positions last night. And then another 173. We're just earning chump change right here. And then we had a nice win here that was Ethereum. She did a nice pump last night. And then Bitcoin came through with, Solana again. Solana was the king of that. And then we finalized with Bitcoin. Ethereum again. I always get the prices wrong. So we did well on that. But let me show you something. NASDAQ fucked it for me. I was trying to grab a retrace on the NASDAQ. Made me pay the price. That's what she did. You can chill out. Yeah, we can just put you on mute. Thank you very much. But anyways, yeah. So NASDAQ made me pay the price yesterday. But going into cryptocurrency overall, it is Friday. The market is yet to open. And what you've got to be careful of is the bigger picture, okay, is that Bitcoin, even though it's been going down for 1, 2, 3, 4 days, the impact of Coinbase. I mean, this story here, where is it? The Coinbase story. There. Wall Street believe, okay, that it's going to make a nice reversal. And it's the only thing, all right? They think it's going to go because you got to understand everyone is going to Coinbase. It was the first company that anyone on the stock market was associated with in terms of crypto, okay? The main one, right? Coinbase, Circle, look what Cathie Wood's done. She sold a stake in Coinbase to go over to bullish. Well, it's these moments that you see the markets correct, ladies and gentlemen, they're great opportunities for you to buy. Because if you believe in the company and the value that it provides and the service it provides, price action is irrelevant. That's why people have diamond hands in Bitcoin, because they're waiting for the fact that the supply of Bitcoin is going to get soaked up. Look how much buying has been going off, yet Bitcoin's price is taking a nosedive. Speaking of which, let's go and have a look at our coin our CoinAnk. Where is it? Let's just have a look at the order flow on the CoinAnk, because this is going to put us into perspective. I've got to do it like this, guys, because Bitcoin has my computer is behaving in such a wild way. I don't normally have everything ready for you. Here we go. So in the last minute, here we go. Let's have a look at the coin order flow. So here it is. What does that tell you? Doesn't tell you much. Why? Because it's not that much. It's very light volume. You can only look at this chart right here to understand if there is a busy market or not. Look at it. There's not that much behavior happening on the bids and the offers. And that is very important to understand when you're starting your trading day, ladies and gentlemen. Okay. Today should be a commodities day, right? Thanks to the decrease in inflation, a lot of imbalances still remain above. Yeah, you would think that. But the OPEC has just recently come out saying that they're going to be cutting the they're going to be increasing the supply or something like that. Where was it? I saw the the news announcement this morning, and I just need to find it and what it said. It actually came out and said that, here we go, OPEC is leaning towards resuming oil output hikes from April. So that took a little bit of a nosedive on oil's price overall. Let's just quickly go and have a look at oil's price. There we go. Yeah, so oil, I forget that. It's 1 hour time frame. Here we go. Yeah, so that did lead a little bit of a move down on oil, but equally it's brought it back up again. But listen, the bigger picture of it all is this, guys, okay? Where we are right now in terms of interest rates, that's the important thing. Inflation data's come out, and it's given the market the idea that we're going to get some cuts. They're coming in with the idea, well, what was the expectation? I'll give it to you right now. Here it is. Says here that the US rate futures price in 61 basis points of Fed cuts in November in 2026 after the CPI data, and that was just 58 basis points before. So the expectation is that we're going to get more cuts. Then it says US interest rate futures slightly raise odds of Fed easing in June to 69%. All right. So let's just now go over to the Fed watch to put it into perspective. All right. Here we go. Look at this. So when we look at the actual reading for the latest cut, look, it's 92%. So we're not going to get a cut in March. April, coming in at 71.3. June, this is where the rates have been changed, okay? But it's still not there. Even it has been updated, but it's not there. They're really not. These are futures traders, okay? But this is the target rate probabilities. This is where you're getting your information from, okay? And with the hawkishness from a lot of the speakers, I mean, Mirren, he's been, I want a 1% cut, I want a whole point cut, I want a whole point cut. Now he's like, yeah, we've been in a restrictive policy, you know. It's kind of restrictive, don't you think? Well, what the hell, man? Anyways, with that being said, let's have a look. Euro wants to spend 38 billions for Ukraine. It's actually 90 billion welfare, apparently. It's going to 90 billion. How is that solving the story of war? It's not really, is it? I really want to have peace talks, but I need $90 billion because I still need to sort out the guys down there. It doesn't make sense to me. Yeah, Brian Armstrong sold $550 million worth of coin stock. Of course you would. Inflation isn't down. I don't believe it's down yet. It's come down collectively, but it's not. I mean, look, here's your data there. 2.4. It has been going down. Look, it has been. It's come down. But the core price is the problem. The core CPI is the issue. And that came in higher. Okay? Yeah. Can we agree that convexity is like gamma in options? Thanks for the ads. It's sort of like that. Right. Okay. So gamma is the exposure, right? Convexity is the change in an event. It's like when you get more of something at a specific time. Okay. And because of people's opinions of that at that point in time, or the actions, there's this convexity that comes into. It's really complicated, but you'll understand when you dive into it, okay? It's all to do with the bids and the offers, believe it or not. Do you think NVIDIA's future's bright or not? It all depends on the fact that they did declare that they weren't going to be offering any more game chips, okay? And, graphics cards. They're not going to be offering any more of that. And that's going to put things into perspective about their earnings per share. But look, there's a lot of accumulation, but volume it has depleted. We've got the earnings per share due in 12 days' time. That's going to be a big market mover. And just going into it all, we can see that the fund ownership has gone down in December 25 from 9,192 to 9,184. 9,000 funds play this stock, man, for God's sake. 4.5 trillion dollar market caps, unbelievable. But, you know, going sideways, it's the earnings. Look, the volume has just disappeared. Just look at it. Disappeared. That's a problem. We're at all-time highs and volumes disappeared. That's what they mean about the concept of overvaluation in stocks. And that's the issue we've got. Okay? Can we see XRP to 50 cents again? 50 cent. Remember that wick? I told you. It's eaten that whole wick and it's back into the XRP formation. Stupid asset. Anyways, Bitcoin. Again, come on. Any more questions? Get ready to create a mug with you as a meme. Happy days. What's it going to be? Fall or rise? Okay, cool. That's not a problem. Who have I got in there with me? No one. VPN, yeah. But if Sailor takes a hit, that takes Bitcoin down to sub 40K, then 1% of the supply will be returned for available purchase. Listen, this thing about Michael Saylor, he's not going to... He even said that he was going to get refinanced if it were to hit at 8K. And he says it's not going to go there. But he even knows a few people that are going to refinance the debt. Or Bitcoin's volatility is absolutely chaotic, that if it were to go down to 8K from these levels, okay, that is quite a wild drop, an unbelievable drop. And what you got to look at is the speed of prices move from these highs. Okay, look at how fast they move down, and then look at how long it takes them to move up. All right. What it takes bull markets in 3 months, bear markets can just take out in 2 days, 3 days. It really is like that, you know. Is there a discount code? No, there isn't. But what would be the value, fair value of Bitcoin at the end of the bear market to investors? Is it possible to calculate? Well, it depends if you use the certain ratios with Bitcoin, but the fair value, do you think this is a marketplace for value? The idea of fair value is going to be opinionated on the basis that price taking a drop to the downside, and a significant one, is fair value to you, but a chaotic loss for someone else. What is the idea of fair value? How do you define it? What price does it have to go sideways to determine fair value? How do we categorize fair value? Well, that's where we start looking at other things when it comes to stocks, but you don't get that with Bitcoin. You've got on-chain analytics, which is only human nature's behavior, the cost of mining and all of that stuff, who's moving wallets, what's its ratios and what have you, the MVRV, whatever it is, okay? There are so many metrics to understand Bitcoin as the behavior of transactions. Those are your metrics. Fair value determined by Bitcoin. Bitcoin could be Bitcoin could be undervalued at 120K. That could be someone's opinion. But when you've got price projections of 1 million, 500,000, 300,000, okay, then of course Bitcoin at 67,000 right now is what? A fire sale. You know? This is it. Tina, what bottom do you see in Bitcoin is the fair price to buy? Okay, look at it like this. This was the longest time they consolidated in this range, this area here, okay? Just to mark it off. That area there was the longest consolidation that Bitcoin spent at an all-time high range, okay, before it broke out. Look at the consolidations afterwards. Didn't spend that much time there and hasn't spent that much time over here. This is the longest time. This is the ultimate area of support for Bitcoin. If they lose 49,000, if they lose 50K, ladies and gentlemen, Bitcoin's going to slump to around 25. Easy. Because if they can't hold it from that point, they're just going to come down. You got a vector candle all the way down here at 30,000. Why can't you see Bitcoin at 30,000? $30,000 Bitcoin is still an expensive coin. Think about it. It's still expensive. Only the bigger players can really accumulate that much Bitcoin. All the whales are going to wake up after they've been doing their selling. But they could equally come in and start buying it up because they now got the cash flow. I think whales don't care about your Bitcoin tech. They care about the fluctuations. And they can start buying a lot of it because they know that certain price points are going to be backed by institutional players. So the whales will always win because they're going to be buying around those same time that those participants are going to be stepping in. It's just one of those, man. No, it won't. Who says? And when you guys understand that, you'll know that anything can happen. Why is Michael Saylor talking about 8K? Why is he talking about lower prices? He's trying to get you used to the idea of it. I mean, that's just spitballing, but hey, never mind. Anyway, the market is open. Tina, what's a good strategy to start circular accumulation? Should I DCA monthly? When do you expect to start running? Is the expected analysis of price $130 a hook to buy? Listen, you buy when the rates get cut. If you want to start doing DCA, we have to be in an easing cycle. We have to. Inflation comes down, easing cycle. DCA is on the premise that when you are in a bullish market, that every time you see price going up, it comes down, you're buying, it continues to go back up, buying, continue, buy, continue, okay? The last bull cycle that everybody was talking about was buy, lose, buy, lose, buy, lose, buy, capitulated, fuck, oh, buy, don't trust it, buy, don't trust it, buy, don't trust it, buy, I trust it, done. That's what happened, man. I can predict the future, but not what I'm going to eat tonight. Okay, cool. Anyways, listen. I'm going to be doing a good breakdown for you all next week on the concept of DCA with the 2020-2040 strategy. And I'm going to pull together a few concepts that are going to help you understand the right time to do DCA. If you're just one of those, trust me, bros, then just buy Bitcoin, do what you want to do, man. But you're going to have some swings. You're going to have some headwinds going forward. Interest rates are still high. Refinancing the corporate debt, the ETF. They've used borrowed money to get that ETF. Now they're going to pull it out and sell it. You name it. It's all going to be happening. All right. Anyways, with that being said, guys, have a great Friday. Mad love and respect. I'll be tuning into you all over the weekend with a couple of shorts on a little bit of flavor, on learning the aspects of the marketplace and any theoretical concepts that we put into the live streams, and put them all on some shorts over the weekend so you guys have got something to work with. With that being said, check out tradersreality.com and I'll